Bitcoin was holding so well at around 21,500. In fact, over the weekend, there were a couple of times where we thought it might actually break upwards. And now as the US markets open, here we are back under 21,000. In fact, if I look at the screen right now, $21,715. And that's because the NASDAQ and all the world markets have also come down ever so slightly. 1 point today, if I remember correctly, the NASDAQ futures were up about 100 points. Now we're down about 25 points. Today, though, I'm going to show you something that's happening on Bitcoin that's only ever happened or never happened in the history of Bitcoin. And we're going to decide whether this is a good buying event or whether this is maybe the beginning of the end, whether this dump over here is actually the beginning of a completely new cycle. So today's going to be a massive show, super important. We're going to be looking at the charts and we're going to be looking at the on-chain data to see whether this could mean a new era for Bitcoin. Don't miss today's show. It's going to be amazing. And stay tuned until the very end because I've got a very, very, very big surprise for you.
The suspicious silence.
Got you again. Yo, fam. What's up? What's going on? Welcome back. So good to be here again. I've got a little note here from Jimmy. It says you got to say the word Bitcoin price and crypto markets a lot so that the YouTube algorithm picks up the words Bitcoin price and crypto markets a lot. So this is the Bitcoin price and the Bitcoin price are part of the crypto markets. Crypto markets are moving sideways because the Bitcoin price is now at 20,675. Have I done my bit for the YouTube algorithm? You tell me.
Definitely.
Great. So I've done my bit for the YouTube algorithm. Now it's time for you to do your bit for the YouTube algorithm. What you have to do is you have to subscribe to the channel to tell YouTube that you love us. And then you got to like this content so we can get the content out there. And then you do that. You like, you subscribe. I say the word Bitcoin price, crypto markets. And then I've done my job and you've done your job. And then what we can do, we can get the show on the road. And there's a big show today. So let's get moving. Today we're going to talk about the Bitcoin price. We're going to talk about FTX and they're bailing out of all these companies, what it means. We've got some macro news for you. We're going to talk about Anonymus and Kwon. We're going to talk about Alex Mashinsky potentially trying to leave the United States. Are those rumors true? Are they not true? We're going to talk about the Solana Phone because I have a confession to make about the Solana Phone. It's going to be a jam-packed show. So I'm not going to waste any more time with the intros. I'm just going to get straight into the show. Let's go, and look at the Bitcoin price, which is, of course, part of the crypto markets. How am I doing with the SEO thing? I'm doing very well. All right, let's look at the Bitcoin price. No jokes. So what we have here is we have Bitcoin on a sideways accumulation. And if you noticed, there was a pattern which was playing out, which was a head and shoulders pattern. Now, a lot of the chartists kind of said that this head and shoulders pattern is invalidated. It's not a real head and shoulders pattern. In fact, what we saw is we saw the right shoulder over here, we saw the head, we saw the other shoulder over here. It broke through the neckline, and now it's starting to come down and maybe invalidate the whole head and shoulders. In fact, Kyle, what are you thinking about this head and shoulders?
Yeah, I think it's invalidated. I definitely lean more towards the downside, especially at the moment it's broken an important diagonal. I mean, the trend is your friend, Ran.
Carl, have you ever leaned to the upside?
Yes, but that was before I joined Banter, which was on the 1st of December. So before that was the bull run, remember? So before the bull run, you joined Banter. The markets went pear-shaped. I was bullish before when the bull run started, yes. All right, so Kyle says this head and shoulders pattern has been invalidated. I mean, technically it's not yet invalidated because if you do take, if you take the neckline and let's just say you were to continue this neckline going down here. So we could just continue a little neckline going down here like that and do that. You see, like we still haven't... We haven't invalidated the head and shoulders yet. So there is some hopium, isn't there? There is some hopium. Let's see if this head and shoulders gets invalidated. All right, so that's my bit of charting. That's my bit of charting for the day. In fact, that's not my bit of charting for today because I actually want to take a look at another chart today, which is, I think, a very, very, very important chart. And that is this chart over here. There's this chart over here, which I think is something that we need to look at. Let me just hold on a second. Let me show you this chart because I think this chart's super important. So this is a chart of Bitcoin ever since, you could say, Bitcoin started. So ever since 2011, when we've actually got some kind of pricing on Bitcoin. This is the chart of Bitcoin since that day. If you take a 200-week
moving average. Now, the 200-week moving average is effectively it's a 4-year moving average. And it shows, it's probably the largest timescale of momentum charts that you can get. So you're looking at, you see it only starts over here. And the reason why it, of course, only starts over here is because before it starts, you got to have 4 years of moving average data. So if you take it over here when Bitcoin started, you take 4 years of moving average data. And you can see that if you plot this 200-week moving average, you can see that the Bitcoin price has always remained above the 200-week moving average, which kind of shows on a global macro momentum scale, Bitcoin has maintained and stayed above the 200-week moving average pretty much ever since we started taking Bitcoin data. There have been some exceptions. So there was one little exception if we zoom in over here, and you look at this small little exception where we had a wick that went under it in 2015. We had a touch in 2018, 2019. We had a breach of the 200-week moving average during the COVID pandemic. But what you can see is that was just one weekly close below, and then on the next weekly close, we went straight back up. And now we've had a breach of the 200-week moving average again. But for this time, what we've had is we've had 2 weeks. We had one weekly close below the 200-week moving average. We had 2 weekly closes below the
this is the second.
We've had 2 weekly closes below the 200-week moving average. You would have had to maintain a level of 22,400 to have closed above it. And now we're in the third week of being under the 200-week moving average. So now we've got to ask ourselves a whole lot of questions. We've got to ask ourselves whether the trend, since Bitcoin has started, the trend has now been broken. So we've got to call a spade and say that, look, right now you got this 200-week moving average, which is probably the biggest, longest moving average that we've got that measures the momentum on probably the biggest and most accurate time frame that we've got. And again, for 1, 2, 3, for the third time in the history of Bitcoin, this 200-week moving average has been breached. And this time we've now stayed under the 200-week moving average for a period of 2 weeks. And right now, as it stands, we're in the midst of the third week, and there's still a long way until next week Sunday, but we're in the midst of the third week where we're below the 200-week moving average. And this leads us to ask a whole lot of questions. We're going to ask ourselves whether this trend that's been around ever since Bitcoin was founded is now broken, or whether this is a great opportunity, a very, very, very rare opportunity to be buying Bitcoin as it breaks into the 200-week moving average. Now, every time that we see that the 200-week moving average has been broken, we know that the events around the 200-week moving average being broken have been what we can call anomalous events. They've been black swan events. They've been massive market corrections. So, I mean, you look at 2015, too far back to talk about. You look at 2019, this was when Bitcoin crashed for the first time. After the big retail bubble that happened, you got retail coming in, getting obliterated over here. And in 2018, in December, after the massive shakeout, we touched the 200-week moving average, but we bounced straight off it. The next time was a black swan event. So this is a black swan event, and that is COVID. So we know what happened. We went to the pandemic. We had 1 or 2 weeks in the pandemic where the whole world felt like it was about to end. Everyone remembers that, of course. And then after that, the markets recovered because the Fed said that they're going to start doing stimulus and start putting money into the economy. So this was a very short black swan event that took us under the 200-week moving average. Here again, you can call it a black swan event, but it's a black swan event that's limited to crypto. So we have a black swan event. We had Luna Terra being liquidated. We had that contagion spread to Celsius. Celsius now reportedly bankrupt. We don't know. We'll visit that in a couple of minutes. Then you've got Three Arrows Capital being liquidated, and then you've got a whole cascade of liquidations that are happening. And you've got to ask yourself whether this is another one of those black swan events big enough to be one of those buying opportunities, or whether we have completely invalidated a trend of 11 years. So have we completely invalidated a trend that's actually been going on since the beginning of Bitcoin? And is this the beginning of a new trend which is going to come down like this and maybe retest the 200-week moving average and then start coming down? We've got to ask ourselves we've got to ask ourselves those questions. As much as we believe in Bitcoin and we want to see Bitcoin succeed, we have to be critical and we have to ask ourselves those questions. So when I get into a situation where I'm not sure from a technical point of view whether we're in the right situation or not, then the next thing I do is I quickly go into the fundamentals. And I look at the fundamentals. And specifically on the fundamentals, here I'm looking at the realized price. The realized price is, if you take all the Bitcoin that have been bought and are in circulation, this is the price that people paid for those Bitcoins. So it takes the long-term holders and the retail buyers and everybody that's holding Bitcoin. It says, what is the price that everybody is holding? And what you can see is that this orange part is the price that everybody's been holding, this little orange part of the shaded area. And you can see Bitcoin is now dipping into what they call the realized price, which means that the majority of people, or the holders of Bitcoin on average, are actually at a loss. And when people are at a loss, then they start to sell and they start to capitulate, because it's much easier to sell when you're at profit. When you're at losses, it becomes a much harder exercise, and people effectively start to capitulate because they're all down on average on their investments. And again, if you look at this chart historically, what you can see is that this chart hit here again in 2020, COVID, just a little touch, just the tip. Before that, we had that just after the 2018 crash. And I keep calling it the 2018 crash, but actually the crash started in the end of 2017, went right through to the end of 18, hung us to dry, left us demotivated, and then only hit the bottom. So only then did the crash hit the bottom, and actually spent quite a bit of time at the bottom. So you can see it spent from about December 18 all the way to about March 2019, so about 3 months. Here it was just a quick dip in, and then here in 2015, when it happened previously, 2014, 2015, it lasted for about 18 months. Not 18 months, about 8 months. So that you got to look at the technicals and the fundamentals. So what this is telling me now is that this is a rare buying opportunity, because what you can see is that it stays there usually for very little, and then you start to get a slight move up. So that's one of the elements that says, you know what, maybe this is just a short-term break of the 200-week moving average. Little test over there, and probably in a week or two, what's going to happen is we're going to start closing above it. If we don't start closing above it, we've got to monitor it. If we don't start closing above it, then we've got to look and start thinking maybe our thesis becomes invalidated. But until then, I'm going to give it another week or two. I want to see in another week or two whether we can go over the 200-week moving average. And if we can, great. I'm also looking at some other indicators. So one other indicator that I found, which is a super encouraging indicator, is if you look at gold compared to Bitcoin. So this is the gold trend line, and this is Bitcoin over here. Now what you can see is that every time that gold gets close to this trend line, Bitcoin bottoms. And then usually what happens is gold bounces off this trend line downwards, and Bitcoin starts to recover. So here we go. One, you can see gold touched the trend line, Bitcoin bottoms, Bitcoin rises. Here again, gold touches the trend line, Bitcoin bottoms, Bitcoin recovers. Again, gold touches the trend line, Bitcoin bottoms, Bitcoin recovers. Now, what you can see, very interesting. So not only can you see that when you look at this chart, but what you can also see in this chart, which I think is very, very cool, is this is the chart that shows you that Bitcoin is the store of value and that gold is being displaced by Bitcoin. So what you can see is look at the trend of gold and look at the trend of Bitcoin. And you can kind of see that the one's starting to overtake the other. So if this carries on for another couple of years, and this chart we just keep extending, what you can see is that eventually Bitcoin is going to start overtaking gold as the ultimate store of value. The other thing that tells me is positive, and again tells me that maybe we shouldn't worry too much about this 200-week moving average, is when I look at dominance. So you've had obviously all the naysayers and the doomsday guys saying that, you know, Bitcoin dominance will get to 50% and 50+%. And now what you're seeing is that Bitcoin was close to 49%. And then it came all the way down and now trading back at 43.31%. So you have this capitulation in the crypto markets, huge capitulation in the crypto markets. And when this capitulation happens, what you get is, instead of people running into Bitcoin, people are saying, no, we're going to continue to buy alts and to play alts. And in just a week, you've seen dominance lose, well, less than a week. You've seen dominance lose, about a week. You've seen 2 weeks, sorry. You've seen dominance lose about 25% of its value. So let's quickly just measure, see how much dominance has lost, which shows, again, also it's actually less, it's 10% of its value. Does that make sense? Yes, it's 10% of its value. So we've seen dominance lose 10%, which means that Bitcoin dominance has dropped and more people are going into altcoins. And if more people are going into altcoins, what it shows is that this problem may be more isolated to Bitcoin and that the market has still got a little bit of confidence or is gaining back its confidence, and they're not running back into Bitcoin as the store of value and saying, we want out of everything, we want out of all risks, we want to go back into Bitcoin. So that's what I'm looking at. And again, very important, we've got to be realistic here. I know we have a thesis, but when we are at risk of our thesis being broken, we need to really question whether our thesis is right and whether this is a very, very, very small part and the longest that we've ever seen in the history of Bitcoin, where Bitcoin remains under the 200-week moving average. So that's pretty much what I'm looking at. On a much shorter term time frame, I did notice that sentiments are mixed. So I said, look, everyone's expecting another leg down, and usually when people expect another leg down, you know what that means. Probably means that there's that the market's going to flash out the majority of the expectations. You've got GCR, who's a great trader, and he says, look, he thinks that we've capitulated. He's taken off his shorts, but he's not ready to go long again. So he has taken off all the shorts, but he's not ready to be going long again. El Capo, sorry, Kyle. Sorry, did I say El Capo? I meant Kyle's pseudonym account. On Kyle's pseudonym account, he says, okay, enough longs trapped. Time to send Bitcoin below 20K. I must say he has had 3 or 4 calls this weekend where hammer time, and the hammer hasn't dropped. I mean, maybe the hammer's broken. Maybe, I don't know. Maybe the hammer doesn't work anymore.
Having to hit nails before you have to hit it a few times.
Can't stop hammer time. Can't stop hammer time. That's where the guy is. All right, so that's where we are. I think he needs something else. He needs like a hammer time, plier time, drill time. The guy can become a mechanic.
He needs a Bob the Builder toolbox.
He needs a Bob the Builder toolbox. In the meantime, we are seeing the continuation of the capitulation. So remember, it started off with Terra Luna, then Terra Luna expanded into Celsius. Then after Celsius, we started to see certain other lenders capitulating, even though they didn't admit the fact that they were capitulating. And then we started to see funds capitulate. So we saw 3 Arrows Capital capitulate. In fact, it probably went Luna, 3 Arrows Capital didn't tell anyone that they were capitulating, then Celsius. So 3 Arrows Capital lost over $500 million in Luna. And I think that was the beginning of the end, because they also had leveraged long positions on Bitcoin at 24,000, thinking they would never, ever be called. And now the market's come back and started to bite their leverage. And it just shows that leverage is a great tool, but leverage is only a great tool if you're working with really, really, really tight stop losses. That's one of the big rules if you're going to be using leverage. All right, so I tweeted and I said that for me, there were a whole lot of different levels. The first level was under 30K, and that's when retail capitulated. That was retail held on very, very, very well until we got to 30K. And then that was when the retail capitulation started to happen. Then at 25,000, the institutions got very scared. Under 20,000 for me is a very scary level. It's a level where the miners start to capitulate en masse. And the reason why I say that the miners start to capitulate en masse is because what the miners do is they take loans against their mining equipment. And what you're seeing now is that these loans that have been taken against the miners, did you open us a drink? Is it a champagne that you opened us, Carl?
It's just a sparkling water. When you get over 30, you have to drink sparkling.
Okay. So the miners are starting to capitulate now. There are a whole lot of loans that they backed. They bought a whole lot of mining rigs, and they paid down a down payment, and the rest they were going to fund from the Bitcoin profits. The problem is that right now, when they're mining the Bitcoin, it's much less profitable to mine Bitcoin. And so now what we may next get is we may get a capitulation of miners, specifically miners that have taken loans. So Yeah, so that's something that may come up. Also, if anybody does want to sponsor us, $1.99 today, so we can get a Bloomberg subscription. We can't afford it anymore because of the bear market, but we would really appreciate a Bloomberg subscription for $1.99 if anybody wants to sponsor us. So I'm worried about the miner capitulation. You can see that miners started to sell a lot of their coins into June to pay for their machines. So we've now seen retail capitulate, institutions capitulate, miners capitulate. I think there's one more capitulation. That's when the infrastructure starts to capitulate. And that would happen around about 15,000. If that started to happen, we'd get a massive miner capitulation. All right, let's move on. What else is there today? I'll tell you what else is there today. Today, I made a deal with Kyle. I sent Kyle, pull up your Binance, share your screen, show us your ByBit account. I sent Kyle money today. I sent him $2,000. And I said to him, look, you need to trade this. Every time you trade it, you got to trade it live in front of the whole community. So he's not allowed to make any trades on that account unless he trades it live, whether it's a buy or a sell. So start looking out for Kyle's streams where he starts buying and selling in this account. Kyle's got, he's not me or Sheldon. He's got a much more, what's the word I'm looking for? Much more conservative approach than Sheldon or I. So you got 2,500 in the account now, right? 2,000.
You gave me 2,000.
2,000. Okay, great. So you now, every time you want to trade that account, you're going to do it live.
Yes.
Okay. Don't overtrade it.
Okay.
But also don't undertrade it.
When there's a good opportunity, I'll take a trade.
When there's a good opportunity, Kyle needs to take a trade and show us what he's doing with the money. That's how we're going to learn Kyle's style of trading. Because every time Kyle walks in the office, he always says he's up. He's never come into the office and said, I've had a bad day today, I'm done. Now, I had a bad day because Sheldon and I bought some Cardano. It's not looking so good. We bought it on the weekend. We bought it at 49. It's trading at 49. That's not so good. But I realized a bit of a loss because one of my stop losses got hit because I'm playing a very, very, very tight stop loss. Doing it on ByBit, where, we know we're putting through all our trades on ByBit. I've still got a Bitcoin long open here, which is a little bit in the money. And I've still got a Rune long, which is, now it's pretty much at what I paid. Okay, so let's look at the rest of the capitulation. So we spoke about the miners capitulation. We spoke about the retail capitulation. We started to speak about the institutional capitulation, and that was Celsius and BlockFi. And what we're starting to learn now is we're starting to learn the big story of what's happening behind the scenes at places like BlockFi, at places like Celsius, at places like Voyager, et cetera, et cetera. And what we're also seeing is that one entity or one person is the one who has a lot of money and is now bailing everybody out. And that's, of course, Sam Bankman-Fried and FTX and Alameda, his triage. And initially, I think people started looking at Sam Bankman-Fried like, thank you for saving the crypto markets. Thank you for bailing out everybody. Thank you for stopping this crypto capitulation. But as I said at the time, I said, I don't think that Sam Bankman-Fried is a philanthropist. I think he's an absolute capitalist. And what he's doing is he's got money and he's generating a lot of money through FTX. And what he's doing with that money is he's starting to create a scenario where he is cleaning up these companies and getting them pretty much for free. And now we're starting to see more and more evidence in this regard. So what we're seeing that, first of all, he gave a line of credit to Voyager, gave them $500 million. But he also bought 14.9 million shares of Voyager. So what does that say to you? It says, I'm getting a cheap entry into your share. I'm going to lend you money. And I'm sure there's some terms and conditions attached to this loan. One of the terms and conditions is that if you can't pay the loan back within a certain amount of time, then I get to buy all the equity for close to zero. The same thing is happening at BlockFi. And we know this now because Mark Yusko, who was with us on Banter on Friday, he showed us, or he came out and he made it public. I don't know if he wanted to make it public, but he did. But he showed, because Morgan Creek, the company that him and Pumps were involved in, invested in BlockFi. And so now what's happened is BlockFi got a line of credit from Sam Bankman-Fried for $250 million. And they said, look, don't worry, everything's fine, but we're just getting a line of credit. What we're subsequently learning is that if BlockFi take this $250 million, What it means that Sam Bankman-Fried buys out all the equity investors for close to zero. So thanks to Morgan Creek for generally leaking details of the FTX deal with BlockFi, we can surmise a few details here. Let's work through the principles together. The FTX deal is as follows. FTX provides a loan to BlockFi that is subordinate to deposits. In other words, it means that the loan is used to pay back the depositors, and FTX receives an option to buy BlockFi at almost zero. Okay, so why would anybody do this? The only reason why anybody would do this is if they thought they couldn't pay back their loan holders. That's why you would accept a loan that basically takes away all your equity. So what's happening here is it feels like SBF is giving them a loan. He's giving people a loan, but he's saying, look, it comes with an option for me to buy all your equity at zero. And I mean, the other equity holders are now seeing this, and they're going, hold on a second, whoa. We invested in BlockFi. Now, Mark Yusko and Pump and Morgan Creek are running around also looking for $250 million, because if they don't get this $250 million and BlockFi accept the $250 million from SBF, then that effectively kicks out the other equity shareholders, the other equity holders in BlockFi, and that's it, you're out. So I think what we're admitting here, one thing we know for sure here, is that BlockFi is probably insolvent or close to insolvent, and doubts whether it can pay back the depositors' money. And that's the only reason why they would accept a loan with such onerous terms from SBF. We're also then in this episode of Capitulations Are Us, we're also seeing that Goldman Sachs is looking to raise $2 billion from crypto funds and vulture investors to buy up Celsius assets. Now, there are two ways to look at this. On the one hand, it could be Goldman Sachs's investment banking division all just going to look for money to give Celsius money and take over the assets of Celsius at a very low amount of money. Or is it Goldman Sachs actually looking to buy Celsius and start offering crypto loans? It doesn't sound to me like it is Goldman Sachs, because if it was Goldman Sachs looking to buy Celsius's assets and start offering crypto loans, then I don't think that they would have gone to raise $2 billion from investors. I think they would have taken $2 billion from their balance sheet. And they would have said, cool, we want to buy crypto lending. We're going to take $2 billion from our balance sheet. So I think I agree with Arthur Hayes. Arthur Hayes has come out and he says, look, don't believe that they're putting up any of their own money here. They see an opportunity. They're going to go and try and raise money. And if they do raise money, they're going to get a fat fee. I don't think that Goldman Sachs is looking at this and going, hey, we want to take over a crypto lender, and this is our opportunity. I think that they see an opportunity to raise money and to buy a distressed asset and to start managing it like a private equity firm would manage an asset. All right. Voyager, who Sam Bankman-Fried also invested in, have issued a default notice to Three Arrows Capital, $600 million, $670 million. They want their money back from Three Arrows Capital. Chances are, someone says they got their Celsius rewards today. I think you got an email about your Celsius rewards, but I don't know if you actually got your Celsius rewards. Let us know in the comments if your Celsius rewards was actually credited to your account, and if they're actually worth anything. I don't know if your Celsius rewards are worth anything anymore. And then we got news that Alex Mashinsky tried to, well, look, this is coming from Mike Alford, and Mike Alford hasn't been Alex Mashinsky's best friend ever. But there was news that he attempted to leave the country via the Morristown airport, but was stopped by authorities. I don't think he was arrested. I think we would have heard if he was arrested. But the rumor is that he was barred from leaving the country. So we've got to keep our eye on that story as well, because, I mean, did he try and skip the country? If he did, where did he try and go? Look, I don't know, but I doubt that would be the case, because I know Alex Mashinsky. Alex has got 6 children. He has 6 kids. I mean, unless he was trying to flee the country with 6 kids, in which case you need a very big plane. I don't think that's the case. All right, on the macro front, we have quite a big week this week. We have a lot of things happening this week. The biggest events that we have this week is we have the Fed. We have a lot of people speaking from the Fed, but in particular, we have Powell speaking Wednesday, 9:30 a.m. EST. So we'll cover that on the show on Wednesday. And then on Wednesday, we've got Bullard. So now remember, Bullard is B for Bullard equals B for bearish. Okay, so that's B for Bullard equals B for bearish. Bullard's always aggressive, always bearish. Also on Friday, we have the Bitwise spot Bitcoin ETF decline. So I'm not even going to say approval, it's decline, because there's no way that they're going to approve the Bitwise spot Bitcoin ETF. Like, no chance. But that's happening on Friday. So the decline for Bitwise is happening on Friday. We also had the Fed saying that annualized inflation is now going to be at 10.03%. Annualized is going to be 10.03%. Can you imagine that the Fed is talking about 10.03%? Mad, crazy, ridiculous. Absolutely ridiculous. And if you want to ask yourself where we are in the cycle, I watched the All In podcast this weekend, and I heard this. I mean, the All In podcast this weekend was phenomenal. And I introduced a lot of you to the All In podcast, but this weekend was specifically phenomenal. On the one hand, the partners had a disagreement amongst themselves as to who gets equity. Now, I'm going to write them an open letter, and when I do, you guys are going to help me retweet that open letter, because I think that Jason Calacanis needs to get a little bit more equity, because he founded the idea. He wants to run the business like a CEO, and the other guys don't want him to run the business like a CEO. They want to own 25% each, and they don't want to have an all-in summit, and they don't want him to commercialize it. And I think that as a community member, as someone who's been watching the cast, I would enjoy an all-in summit. I would enjoy all the things that they would do around the brand, and not just keep it to 4 people meeting on a podcast. I think that's just the beginning of it. And so I'm going to write them an open letter. When I do, you guys are going to help me retweet it. But when Chamat spoke about where we are in this recession, listen to this.
It's less of a judgment on, but it's just more an observation that we're at the beginning of the beginning. And again, we're at the beginning of the beginning. Okay. For all of us that lived through 2000, this was 4 years of sheer hell and a grind. Now we have $30 trillion that we have to work through the economy, a recession we have to overcome, a war we need to end, and people all of a sudden assume that 2 or 3 rate hikes and 5 or 6 months of headlines are enough. And on the margin, maybe they're right. But from my perspective, it's less a judgment on, but it's just an observation that we're at the beginning of something that just fundamentally has to take some amount of time to work its way through the system. And so I don't understand why anybody would give up their liquidity in this moment right now. Why would you? Why would I give up $100 million of cash in my bank account? I would not do that right now.
Okay, so that's
the cash.
That's a stern warning to you that if you thought of, or if you follow Chamat and you thought of deploying all your cash right now, this thing could take long. I mean, if you look at, let's go back to this chart over here and go back to 2018. Here we go. So let's go back to 2018 over here. That's the top of 2018. And you can see we came down for quite a long period of time. And even once we hit the bottom, which was in 2020 only, so a year and a half later, we still moved sideways and, for another 6, 7, 8 months. So this could take long. And so if you're thinking of deploying all your capital at once, think again. Always keep dry powder in the bear market, but make sure that you do deploy it over the bear market. So always keep whatever cash you got, realize it, and deploy it slowly over the bear market, because as the market goes longer and longer, it's good. You're going to still see a lot of great bargains, and they're going to come in different sectors. So different sectors in the market are going to collapse at different times, and you want to make sure that you are well positioned to actually take advantage of that. All right, quickly, before we get into the big story that I wanted to discuss with you guys today, I don't know if you saw this, but I mean, if I were Kwon, I would be shitting in my pants, because there's nothing worse than getting a message from Anonymous. Because when Anonymous sends you a message and they say the scary words, they say, "We are Anonymous, we are a legion, and we are coming for you." When they say that, you basically, what you do is you quickly shit in your pants, and then you try and disappear and never be seen ever again. Now, Kwon has a message from Anonymous. I don't know if you guys saw this. I mean, you laugh, but this is scary, bro, when it's all fun and games until it's your name. Imagine it said, "Message to James Campbell."
This is a message from Anonymous for Kwon. The past several months have been bad for crypto and the economy as a whole. We were likely going to experience some pain in the crypto industry because of the macro environment, regardless of what was happening internally. But the actions of Kwon, the founder of the Terra Luna ecosystem, is single-handedly responsible for scamming billions of dollars away from retail investors. Kwon made a name for himself with his arrogant tactics, trolling competitors, critics, and acting like he would never fail. In fact, he said that he found it entertaining to watch other projects fail.
I wonder how many of these companies you think are entering the space just because it's hot and there's a lot of funding.
I'm shitting myself
the ones
here.
that will still be here, you know, like 2 to 5 years later.
95% are going to die.
Yeah.
95% are going to die. Yeah. But there's also entertainment in watching companies die too.
There's entertainment. Oh man, that's so evil. At least you get to learn from it, right?
On one occasion, he called a journalist poor for asking him difficult questions. However, he was quickly knocked down by the markets. The louder they are, the harder they tend to fall. News has now come to light that he was cashing out over $80 million each month as Luna was successful. Kwon denied these accusations in a roundabout way, but not exactly. In a recent Twitter post, Kwon denied cashing out $2.7 billion, but that doesn't account for the $80 million each month that he was apparently taking.
Quite a
Claims
salary,
that he lost most of his money
$80 million.
along with everyone else in the market, and that he was also all in on Luna. The information that he was taking millions from the protocol each month comes from testimony of Terra Labs employees during interviews with the SEC. As a result, Kwon is being investigated for money laundering, in addition to the other accusations against him of malice and fraud. Sometimes people just make mistakes, and sometimes businesses fail, but there is significant evidence that Kwon had bad intentions from the start.
It's a cycle of life. You begin from nothing and go back to nothing. And that's exactly where I want to be. So I think Terra is going to be the decentralized money standard across the entire blockchain, across all the blockchains. And I'm excited for Terraform Labs to contribute a significant portion of that early vision, but eventually to go back to nothing.
Before launching Terra Luna, Kwon worked for another failed stablecoin called Basis Cash. That project failed due to regulatory concerns and investors lost money, but he was never held accountable because he was working under the anonymous name Rick Sanchez, taken from the popular cartoon Rick and Morty. It is obvious to us that Kwon has plenty of secrets and he has been very sloppy in his execution. Multiple governments are conducting their own investigations into the scammer, but so are we. Anonymous is looking into Kwon's entire history since he entered the crypto space, to see what we can learn and bring to life. There is no doubt that there are many more crimes to be discovered in your trail of destruction. Kwon, if you are listening. Sadly, there is nothing that can be done to reverse the damage that you have done. At this point, the only thing that we can do is hold you accountable and make sure that you are brought to justice as soon as possible. We are Anonymous.
We are a legion.
Expect us.
Expect us. When they say that we are Anonymous, we are legion, expect us. You don't want to get like hey, Carl Doops, we are Anonymous, we are a legion. Expect us. That's it. You don't want that anymore. You don't want that on your name. All right, let's talk about the story that I actually wanted to speak to you guys about. Why we actually got you in the first place. So, no doubt that you heard that Solana is launching a phone, right? You all heard that the fact that Solana is launching a phone. And when they came out, I think I have to be vocal about the way that I feel. And so the first thing I did was when they came out with Solana launching a phone, this huge announcement, I said, Solana building a phone, maybe they should focus on building a stable network before they get distracted by competing against Apple or Google. Now, as you know, what happened then was I was tamed on Twitter. And I was tamed by none other than the co-founder of Solana. His name is Raj. And Raj came out and he basically said, of all the people I expected to understand the nuance of this effort, you were near the bottom of the list. You've met expectations nicely. Now, we carried on bantering around this phone for a while. But then I asked myself a question. Raj is a smart guy. Anatoly's a smart guy. Kyle Samani is a smart guy. And I challenged Kyle Samani on Twitter around this phone. And there must have been a lot more to this phone than initially meets the eye. And the reason why I was so skeptical is because I've seen many people talk about building crypto phones. And to be honest, it's all garbage. It never, ever succeeded. In every bull market, we have some small phone manufacturer looking to build a phone. But after having done a lot of research, I think, or I did an about turn on my view around the Solana phone. And I want to talk to you through why I did an about turn, what I was thinking around doing the about turn and what happened. So the first thing that I did was I went to the launch video. This is my starting point around the Solana Phone. I went to the launch video of the Solana Phone, and I started looking to see the reasoning. And I want you guys to listen to this, because I think there's a lot hidden here.
Especially to me, I literally started my career at Qualcomm.
Oh, well, let me get the.
I worked on every mobile device under the sun, and I worked in this platform called Brew. I don't know if you folks remember it. This was one of the first developer platforms for mobile. This is at the time when the only thing people did with their phones was call and use ringtones. And we built the first platform. We had a ton of developers actually building applications. And I remember the first breakout app, this was a huge deal, was Jam Dead Bowling. It had 2 million downloads, which was wild. That meant that like 2 million people downloaded this kind of silly gaming app and were playing it, while they're commuting or whatever. And we could see that our dream of having a computer in your hand that can do anything is possible. And little did we know that in 3 years, there was going to be nearly 1 billion people with that dream actualized. It's crazy, right? How fast it can happen. So that can happen in crypto. I don't know if that 3-year period starts now. I think it might. So I think it's time for crypto to go mobile.
So if we want crypto to go mobile, and remember that crypto is actually designed to be used with a phone. You want to create no barriers so that anyone with a phone can access financial freedom and potentially access the services of any kind of blockchain. The issue is that today you can't do that. And the reason why you can't do that is because if you want to transact using crypto on your phone, effectively what you need is you need a Web2 browser. And ideally, you probably need a Web2 desktop browser. So the experience of using a wallet linked up to a dApp on your phone is very clunky and pretty much can't really happen because you're integrating Web3 with Web2 browsers. The issue that we have is that in Web2, and specifically when it comes to mobile devices in Web2, you've got gatekeepers. And the gatekeepers in this case are Apple and Android, or Apple and Google, because they really control whether or not we can use crypto and the type of dApps that we can use with crypto. They control the entire app store. Apple controls the revenue that they make, and the revenue is super, super, super high on all the dApp purchases. And so effectively, if we want crypto to become mobile, we need to either wait for Apple or Google, or we need to find a way to bypass Apple and Google. Because what we can't carry on doing is we can't carry on having Web3 dApps powered by with Web2 integrations. It's just the experience doesn't really work. And so if we want to do this, we need something bigger. And so Solana unveiled what they called SMS. And I want to show you what SMS is. So let's quickly just look at SMS.
So everyone that's been following us on Twitter, I think it's time to learn what is SMS.
So they launched Solana Smartphone Stack. Solana Smartphone Stack is an Android application, which is a stack. The stack effectively consists of 3 layers, and I want you to hear it from them in terms of how the layers work and how they're powered. This is the head of their mobile effort. So listen to what he says.
Class Solana applications onto mobile devices. With that in mind, I'm pleased to be announcing the Solana Mobile Stack, or SMS. It's a Web3 layer for Solana, built on Android, that allows developers to build those mobile applications and bring them those experiences they want to bring to the community. It'll unlock our developer community to treat SMS devices as first-class citizens of Solana. There's 3 technologies I want to announce today. The first, Seed Vault, a key custody solution. Second, mobile wallet adapter, to bring transaction signing for dApps to Android. Third, Solana Pay for Android, bringing some of those mobile payment innovations like Tap to Pay to
So what they've done is they've basically taken all the applications of Web3 and they said, look, let's build this application into one stack and call it SMS. So you need a vault because you need to store your private keys. You need to integrate all your wallets into one place. So you need to be able to integrate all your wallets into one place. And then you need to be able to make payments. And if you've got those 3, then your phone really becomes a Web3 payment device. Okay, so that's how he defines SMS. Now, let's go through. I want to take you through to where they actually launched the phone, because remember, up until this point, they haven't actually launched the phone. What they've done is they've just launched a mobile web stack. This is where they launched the phone.
For mobile. Quick video showing.
Oh, before that, sorry. What they're doing here is they're showing you how easy a transaction will be using a Web3 stack on a phone.
You can see here, you want to purchase an NFT, straight over to the wallet. As soon as you click approve, we bring up Seed Vault to authorize, tap your fingerprint on the sensor, and there you go. It's in your wallet.
It's very seamless, super, super seamless.
A huge amount of engineering work went in behind the scenes to make this happen. There's a complex protocol that dApps use to discover wallets available on the device, connect to those wallets, establish an encrypted channel, and there's security baked into the protocol throughout. And this required cooperation between the Solana Mobile stack and then wallets and dApps. One more thing I want to announce is the Solana dApp Store, an open dApp store without the extractive fees, allowing for proliferation of crypto-native apps, digital services, and digital goods like tokens.
So that's the game changer in my opinion, because right now, Apple is the gatekeeper of the App Store, Google are the gatekeeper of the Android App Store. And so by building our very own dApp Store from the ground up, we can start building crypto-native apps on a dApp Store, which is decentralized, which anyone can use. Now, here is where they unveiled the phone. So let me show you where they unveiled the phone, which I think this was the aha moment.
Thank you, Steven. So wow, right? Solana Mobile Stack, 4 new technologies for mobile. The Seed Vault, which turns your phone into a hardware wallet. The mobile wallet adapter, which integrates all the dApps and wallets in your phone. Solana Pay, pay with any token anywhere. And the world's first open dApp store without any extracted fees for developers. So as long as a secure hardware element is included, any OEM can implement SMS on Android. You know, we're in conversations with major OEMs and carriers, but you don't have to wait.
So they launched the phone. They launched the phone in partnership with a company called Saga. And the truth is, it's a very, very, very cool phone. It's a super cool phone. And you can see that orders of the phone, I mean, if you can track them on chain right now, there are 2,112 orders. It's not about going mass at this point. What it's about at this point is about giving Web3 developers a platform to start developing crypto native apps and on a legitimate phone, on something that's a reasonable quality, good phone. Now, one, it makes us break away from Apple and Google. So we're not now at the mercy of Apple and Google and the speed that they have to move at, because we've got our own app store which operates on our own crypto phone, which, by the way, is a decent phone. I think so a lot of people changed their mind about it. I changed my mind about it. I did a complete about turn. Hold on. I said I did a complete about turn. I was initially vocally skeptical of a Solana phone, so I dived deeper. I read multiple blogs, threads, watched the video, and I think I understand it. And I wrote a whole tweet thread about doing it. Most importantly, what you got to remember is that the guys that are building it are not nobodies. What the guys that are building it are Anatoly Yakovenko. Now, this guy, as he said in the beginning of his speech, he worked for Qualcomm for 13 years. Qualcomm is one of the biggest players in the cell phone industry, and he worked there for 13 years. So he knows exactly the ins and outs of the phones. He understands the industry very well. And if we want blockchain to go mobile, then this may actually be the biggest option that we have. So I want to show you one more thing, and this is an interview with him on Bloomberg. Have a listen to this.
Launching a mobile phone fit into Solana's broader ambition of. So how does launching a mobile phone fit into Solana's broader ambition of being a pivotal key NFT blockchain?
I mean, thank you for having me, first of all. It's awesome to be here. So phones are the everyday device that you use. You know, everybody has one. You probably spend more time on your phone than on anything else. And the most important part about crypto and these networks is self-custody. And it's a really complicated piece because it involves cryptography. So not a lot of people understand it. Not a lot of people actually use wallets like Phantom, like MetaMask around the world. And the goal with the phone is to make that experience delightful and easy and simple, and have the user experience of like Google Pay or something like that.
You actually had a career.
Okay, so that's that. And I mean, what the critics said, and my crit about it as well, was that they should rather focus on getting a stable network than focus on taking on Apple and Google and building a phone. But the truth is, what it seems to be going on internally is that the transactions that are clogging the network or spamming the network and bringing down the network all the time are done by bots. And they've got certain solutions which they're implementing already and are being managed by another engineering team taking care of managing the network outages. He did speak about this on the Bloomberg interview. Here, have a listen to this. Here we go.
That would be amazing. That means this is a crypto phone running on a decentralized 5G network.
Okay, here's the part.
So, Solana has been focused on more kind of fintech applications. Why throw wireless into the mix?
I think the key part to adoption is making that experience of cryptography simpler for users. It's just such a complicated thing.
Right, sorry, I wanted to talk to you about a different part, which is, sorry, but further on in the video. It's about, yeah.
Solana has been having issues with congestion. Won't this additional usage make that worse?
So congestion issues that we have on the network come from bots, not really from humans. And a lot of the performance improvements in 110 are already showing that a lot of the bugs have been fixed. Every release just makes the network better and better.
What else are you doing to fix the reliability issues?
There's 3 technologies that are rolling out. So they're already implemented in 1.10, and 1.10 is already a mainnet. But they're not activated by the community yet. And that's going to take over the next several months. And that's quick, stake-weighted QoS, and most importantly, localized fee markets. So if you heard of Ethereum and how there's an airdrop and all of a sudden transactions are costing $1,000, that's something that can be contained within an application. So when there's something popular happening in one airdrop, that doesn't impact Solana Pay, for example.
Yeah, so they do have a solution. I think that's a very, very smart solution called Localized Fee Market, which is basically, like you said, it takes the pressure off one dApp, off the rest of the network. And so look, long story short here, I was initially very, very, very skeptical about the Solana phone. And once I did a deeper look, I think that it's one of the biggest moonshots that has been taken in crypto for a while. And if we do want blockchain to be on mobile, then we can't wait for Apple or Google to take the lead here. We can't wait for the manufacturers like Samsung to take the lead here. I think we're going to have to take the lead ourselves and build a app store from the ground up for crypto native apps, which is completely seamless. If you want to use your crypto apps, are completely seamless. So to me, I did an about turn and I ate humble pie, but you know what? I'm proud that I could have a view, learn, take the research, and then change my mind and do a complete U-turn. And I think that that's one of the things that I've learned in life is you got to remain humble and you got to remain ready to be proved wrong. And when you're proven wrong, you got to admit that you're wrong and that maybe this is an amazing idea. And I think this is one of those amazing ideas. So I know it has been a bit of a longer show today, but I do want to talk about 1 or 2 more things. First of all, we are almost the biggest squad on the ByBit World Series of Trading competition. Remember, there's $8 million up for grabs here, of which you guys, if we win, get 1.8 million. We get 20%, which is 360,000, but we're giving our 20% back to you guys. If you want to join our squad, and I think you should join our squad because we should win, because right now we're the biggest, and the biggest squad is the one that usually wins. You just go to ByBit, sign up with our referral link, and then join the Snipers Trading Squad here. Click it, and then you'll get onto that league over here. Onto our league. So go and do it, sign up as quickly as you can. And the competition actually started today. So we've got to move. And there's one Korean team, which are a bunch of DJs, which are coming after us. So we've got to win that. Also, what I wanted to do was I wanted to give some love to one of our sponsors that we've had on the show for a long time. Great sponsor. But the reason why I wanted to give them love is because I've been using the product and I use the product all the time. So the product is called CoinStats. And the reason why I use CoinStats is it allows me to connect all my exchange accounts and all my wallets using one application. So if I wake up in the morning and I want to see what's happening on all my exchange accounts and all my wallets with one view, then all I do is I connect them up and I start using CoinStats. Now, if you look at here, what I've done is I've connected one Kucoin account and one MetaMask Ethereum account. But you can do this with multiple wallets across multiple chains. You can do it with multiple exchanges. And then as far as I know, it's the best and maybe one of the only tools that allows you to connect so many wallets and exchanges and apps and actually see it all on one place. It's so simple. You just press connect portfolio. You look at which portfolio you're trying to connect. Are you trying to connect an exchange? Are you trying to connect a wallet? Are you trying to connect what are you trying to connect? And then you can start seeing and even trading out of the CoinStats app, which is absolutely amazing. Now, again, there are our sponsors. If you want to sign up, you can click on using our referral link below, which I've just used. You're paying $5.74 a month. So, okay, I already have a subscription, but you're paying $5.74 a month or $68 for the first year, which is crazy. And you got a 14-day money-back guarantee. So, I don't know. If you want the tools, you need to have the tools to see what's happening in your portfolio, especially now in this market. And this is one of the tools that I rely on. So I just thought I'd give my sponsors some love and just thank them for sponsoring our show and for having such an amazing tool. All right, it has been a longer show than normal. Sorry, not sorry. See you guys again tomorrow. Until then, have fun, trade well, my friends. Carl, why did you dox Jimmy?
Well, he's a model, you know. You can anyway find him in the magazine, so it's free for anyone to see.
It's free for anyone to see. Now the pressure's on you because you got to trade all your trades live. I want to see this. I want to see.